When he was 13 years old, Griffin became fascinated by the stock market. While other kids his age were playing video games or sports, he was reading the Wall Street Journal and studying stock charts. He would clip articles about companies and file them away, building his own research library. His grandmother gave him some money to invest, and he started making small trades, learning the mechanics of the market. By high school, Griffin was already thinking like an investor. He didn't just want to understand stocks. He wanted to understand why they moved, what drove prices up and down, and how information flowed through markets. This curiosity would become the foundation of everything he built. In 1986, Griffin enrolled at Harvard University. Most freshmen were worried about making friends and adjusting to college life. Griffin had different priorities. He wanted to start trading, and he wanted to do it seriously. During his freshman year, he convinced his grandmother to lend him more money. Then he borrowed even more from friends and family. With about $10,000 in capital, he set up a trading operation in his dorm room. This wasn't some casual hobby. Griffin installed a satellite dish on the roof of his dormitory to get real-time stock quotes. Remember, this was 1987, before the internet. Getting live market data was expensive and complicated. Most professional traders worked at big banks or trading firms with access to expensive Bloomberg terminals. Griffin jerry-rigged his own system as a college freshman. He started trading convertible bonds, which are corporate bonds that can be converted into stock. These securities were complex and often mispriced. Griffin would analyze the bonds, figure out their true value, and make trades when he spotted discrepancies. He was practicing a strategy called convertible arbitrage, exploiting small pricing inefficiencies between the bonds and the underlying stocks. Word spread around campus. This kid in Cabot House was running a real trading operation from his dorm room. He was making money, real money. By his sophomore year, Griffin was managing over $1 million. He hired other students to help with research and analysis. His dorm room had become a miniature hedge fund. The returns were impressive. Griffin was generating profits by finding pricing mistakes that professional traders were missing. He had an edge because he was willing to dig deeper, work harder, and think more carefully about these complex securities than almost anyone else. But Griffin didn't just want to trade from his dorm room forever. He wanted to build something bigger. In 1990, at age 22, right after graduating from Harvard, Griffin founded Citadel. The name came from a suggestion by his high school Latin teacher, symbolizing a fortress of strength and security. Starting a hedge fund with no track record and no connections was incredibly difficult. Griffin was young, unknown, and asking wealthy investors to trust him with their money. But he had something powerful on his side. He had a documented record of success from his college trading, and he had an incredibly detailed, systematic approach to investing. Griffin raised about $4 million for his first fund. He set up shop in a small office in Chicago. Why Chicago? Because it was the center of derivatives trading in America, home to the Chicago Board of Trade and the Chicago Mercantile Exchange. Griffin understood that if he wanted to trade options, futures, and complex derivatives, Chicago was where he needed to be. The early years were challenging. Griffin was competing against established hedge funds with decades of experience. But he had advantages they didn't. He was incorporating technology into trading in ways most firms weren't. He was building mathematical models to identify trading opportunities. And he was absolutely relentless about risk management. Griffin's philosophy was different from many hedge fund managers. He didn't want to make a few huge bets and hope they paid off. He wanted to make thousands of smaller bets, each with a slight edge, and let the math work in his favor over time. It was like being the casino, not the gambler. If you can consistently find situations where the odds are 51% in your favor instead of 50%, and you can make that bet thousands of times, you'll make money. By the mid-1990s, Citadel was growing rapidly. Griffin was hiring mathematicians, physicists, and computer scientists. He wanted the smartest people he could find, regardless of whether they had traditional finance backgrounds. He was building a quantitative trading firm before that was common in the industry. In 1998, the hedge fund industry faced a crisis. Long-term capital management, a fund run by Nobel Prize-winning economists and legendary bond traders, collapsed spectacularly. They had made massive leverage bets that went wrong, and their failure threatened to destabilize global markets. Many hedge funds suffered huge losses during this crisis. Citadel survived. Not only survived, but thrived. Griffin's obsessive focus on risk management paid off. While other funds were blowing up, Citadel's diversified strategies and careful position sizing protected the firm. This was a defining moment. Griffin proved that his systematic, disciplined approach could weather extreme market stress. After the 1998 crisis, Citadel's reputation grew. Investors wanted to put money with managers who could survive the worst market conditions. Griffin's assets under management increased dramatically. By the early 2000s, Citadel was managing billions of dollars and becoming one of the most successful hedge funds in the world. Griffin expanded beyond convertible arbitrage. Citadel started trading equities, fixed income, commodities, and currencies. The firm built trading strategies across dozens of different markets. Griffin's vision was to create a diversified investment platform that could generate returns in almost any market environment. In 2002, Griffin made another bold move. He launched Citadel Securities, a separate market-making business. Market makers are firms that provide liquidity to financial markets by constantly offering to buy and sell securities. It's a different business from hedge fund investing, but Griffin saw an opportunity. Citadel Securities would eventually become one of the largest market makers in the world, handling a huge percentage of all retail stock trades in America. When you buy or sell a stock through an app like Robinhood, there's a good chance Citadel Securities is on the other side of that trade, facilitating the transaction. The 2008 financial crisis was another defining moment for Griffin. As the housing market collapsed and major financial institutions failed, markets went into a freefall. Lehman Brothers went bankrupt, Bear Stearns collapsed. The entire financial system seemed on the verge of collapse. Citadel didn't escape unscathed. The firm lost money in 2008, with the main hedge fund down about 55%. It was a brutal year, and Griffin faced redemption requests from investors who wanted their money back. Some people thought Citadel might not survive, but Griffin refused to give up. He suspended redemptions temporarily to stabilize the firm. He restructured operations, cut costs, and doubled down on his core strategies. And then, in 2009, Citadel roared back with a 58% return, one of the best years in the firm's history. Griffin had saved the company through sheer force of will and brilliant trading. Over the following years, Citadel became an absolute powerhouse. The hedge fund consistently delivered strong returns. Citadel Securities grew into a dominant force in market making, reportedly handling about 40% of all retail stock trading in the United States. Griffin had built not just one successful business, but two massive operations under the Citadel umbrella. Griffin became known for his intense work ethic and demanding standards. Stories circulated about him working 18-hour days, calling employees at all hours, and obsessing over every detail of the firm's operations. He expected excellence from everyone around him and was willing to pay top dollar for the best talent. By the 2010s, Griffin had become one of the wealthiest people in America. He bought some of the most expensive real estate in the world. He paid $238 million for an apartment in New York City, a record price. He bought properties in Miami, Chicago, London, and Palm Beach. His spending made headlines, but it also reflected just how successful Citadel had become. Griffin also became a major philanthropist and political donor. He gave hundreds of millions to educational institutions, including $150 million to Harvard. He donated to medical research, cultural institutions, and veterans' causes. He also became one of the largest political donors in America, primarily supporting Republican candidates and causes. In 2021, Citadel and Griffin found themselves at the center of a massive financial news story. Retail investors on Reddit organized to buy shares of GameStop, causing the stock price to skyrocket. This created huge problems for hedge funds that had bet against the stock. Citadel Securities, as a major market maker, was involved in handling the massive trading volumes. Some Reddit investors accused Citadel of manipulating markets to help hedge funds that were losing money on GameStop. Griffin testified before Congress, defending the firm's actions and explaining the role of market makers. The controversy brought enormous attention to Citadel and Griffin personally, though investigations found no evidence of wrongdoing. In 2022, Griffin made another major move. He announced that Citadel would relocate its headquarters from Chicago to Miami. After more than 3 decades in Chicago, Griffin decided that Miami's tax environment, weather, and growing status as a financial center made it the better choice for Citadel's future. Today, Ken Griffin runs one of the most successful investment firms in history. Citadel manages over $60 billion in assets. The firm has generated more than $70 billion in profits since inception, making it one of the most profitable hedge funds ever. Griffin's personal net worth is estimated at over $40 billion, making him one of the richest people on Earth. Griffin's story is remarkable because he built everything from essentially nothing. He didn't inherit wealth or connections. He started with a satellite dish on a dorm room roof and $10,000. Through intelligence, hard work, and an almost obsessive attention to detail, he built a financial empire. What makes Griffin's approach unique is the combination of quantitative rigor and risk management. He uses mathematics, technology, and data analysis to find edges in markets. But he never forgets that markets can be unpredictable and dangerous. His survival through the 1998 crisis and comeback after 2008 demonstrate that discipline. Griffin represents a particular type of modern investor. He's not picking individual stocks based on gut feelings or following trends. He's building systematic strategies, using armies of PhDs to analyze markets and deploying massive amounts of technology to execute trades. Citadel is as much a technology company as it is an investment firm. The Ken Griffin story shows what's possible when exceptional intelligence meets relentless work ethic and access to capital markets. From a teenager reading the Wall Street Journal to one of the most powerful figures in global finance, Griffin's journey spans just over 4 decades. And at age 55, he shows no signs of slowing down.